Why I'm a claim advocate and what I can do for you. For a decade, I did insurance adjusting on structures primarily, from homeowner plans, commercial claims, to CATs, which is catastrophic disaster claims. Finally, I couldn't stand it anymore and I quit to retire. Insurance carriers are in the business to make money. That's fair enough, it's commerce. But the greed that has grown in the insurance industry over the past 100+ years was so appalling to me. I could no longer be the front face of the insurance carriers I was hired to represent. And working with some of these carriers, I found that they were indeed criminal in their deceit to their customers. I saw businesses on the brink of bankruptcy for being quietly denied their just compensation for valid claims. I saw many people buy new roofs for their homes while only getting a token amount from their valid claims. And more. I can give you tons of stories. At the core of the swindle mechanism that the carriers run on their claimant customers in the policy, quote unquote, the policy is a generic form that all carriers use. Most of the time, homeowners policies are HO4s. No, what did I say? They're HO2s forms. You can look it up on Google. And they vary those slight variations based on the type of coverage. It's a work of art in a bad way. I've yet to meet a claimant who's read their policy, the one that gets mailed in a package to them after the payment they've paid for their insurance has cleared the insurance company's bank. This generally is a 24-page document, and it's intended to only be understood by persons employed in the insurance industry and attorneys. One of those fine print things that most people never read before signing a statement. They have read it and agree with it. Part of the con on this is to make it incredibly hard to understand, and then they can be led around with a rope tied to a ring in their nose by the insurance company. That's the policy, quote unquote. Literally, it's a maze, and we cover this except, and we don't cover that kind of statement on and on and on in that policy. It's mind-numbing. It's used to cover up gray areas that carriers exploit to the max, and in a lot of cases, to be very clear, but hidden in the bright daylight in the middle of another or other twists and turns. So unless you read the 6th paragraph on page 18 in the parentheses, you know, it boils down to a handful of things that are covered and generally get paid on, but most of the 24 pages define all the things that it doesn't cover, many of which you scratch your head and say, well, why not? Generally speaking, it's a take it or leave it type proposition, with a few of the exclusions being added through addendums that you can pay more for, but only if you ask for them. And what is covered is eaten up with the value reductions due to depreciation, meaning it was not brand new the day it was damaged or destroyed, and so its replacement cost is substantially less. Depreciations, everyone agrees is fair. That's the way it is. You know, we depreciate it by 50% because it's 2 years old. Of course, at a substantial policy price increase, some carriers do provide replacement reimbursement with no depreciation. Then, of course, is the size of the deductible that was elected for at the time that the policy was purchased. That too is justified, and that's so the claimant won't have to have the incentive to put in multiple claims on every little small loss, and so much more. The fact that the insurance rep that is spoken with on the phone when you call in a claim and you continue with that claim, or by letter about your claim, and who generally is wholly or in part a decision maker on if and how much the claim is going to pay out to the claimant, is motivated financially to keep the payouts for the month, for the year, at the lowest levels possible for the sake of insurance of the insurance company that they work for. They're given quotas to work toward, as is the case for most work activities. Plus, if they don't try hard enough, they won't have a job and certainly won't be able to get a higher salary at a competitor company. And then there are the bonuses. You're getting $2,500 for being under quota and saving the company $18,000 this past month. For explainable reductions in claim payouts and denying a claim on a technicality in the industry is a standard operating procedure. It's all about maximizing the profit while not worrying about the occasional angry customer that jumps ship to another carrier. It actually operates the same way. And on. My mission is to give information to the general public who buy structural insurance policies, meaning homeowners policies, commercial structural policies, and that sort of thing, that will give them equal footing with the carrier, so that their claims are presented in a way that eliminates booby traps, and you have sound rebuttals to insurance reps on their lowball settlement offer. And yes, it is an offer that you can effectively argue if you know exactly how to state why it's incorrect. Plus, provide the leverage tools to use if the insurance rep refuses to negotiate a more equitable settlement. Tools that will get you results in your favor. There's no guarantee that everyone will get a claim paid or that an original settlement offer will be more, as it rightly should be, but it is highly probable that you will get thousands and even tens of thousands of dollars more if you follow the information and have a valid claim. I provide the information in weekly YouTube videos, paid subscriptions for closer looks into each of the videos as they are published on YouTube, and an entire course in the whole subject so that it can be available to you immediately instead of bit by bit with the YouTube videos, and their subscription enhanced details. Plus, occasionally I offer consultant services, referrals, and more. I highly recommend you subscribe to my $7.95 per month weekly and bi-weekly reports detailing what was brought up in the YouTube video as they are published. The videos are generally 5 to 10 minutes long. I'd say it's a wise investment to subscribe at maybe three cups of Starbucks coffee a month. But that's a choice that you're going to make. That's me. Y'all come back. And please do subscribe for only $7.95 per month at claimadvo.com. And if you like this video and you want to get more, just like it and subscribe on the button below, the bell.